What's up guys, Donnie here. With the meteoric rise of Tesla becoming the 5th largest US company in the world, everyone seems to be on the EV train, or maybe we should call it an electric train. But is all this EV hype just a big stock market bubble ready to burst? I'm going to tell you my thoughts on the matter and what I'm going to be doing, so let's get started. As this is going to be another video in my Simply Explained series, I'm not going to get into the nitty-gritty details of the stock market bubble, specifically in regards to EVs, but I will try to explain it as simply as possible. Please also keep in mind that I am not a financial advisor. Always do your own research when it comes to stocks. So let's get started. So it's important to know what exactly a stock market bubble is. A stock market bubble starts to form when there's so much enthusiasm in a specific stock or type of stock that the prices of the stock or the type of stocks are raised significantly higher than the actual value of the stock or the intrinsic value of the stock. So basically, there's so much fear of missing out that people start buying the stocks even if they're just vaguely related to the stock that has already risen, that they're not thinking of what they're investing into. They're driving up the price of these stocks and expecting them to follow the lead of the previous stocks in the same category that have skyrocketed already. The problem with this is that if people are not doing the research in these stocks, they're just expecting it to rise up very high quickly. They have a much higher risk of losing all of their money because these stocks have not been properly researched and there is no actual backing to these companies. It's like investing in Kmart because Walmart became so good. You know what I mean? Kmart eventually went bankrupt and there's like 1 or 2 ghost Kmarts left out there, and Walmart's still doing fine. In our case, we're looking at the EV stock market, electric vehicle market. Tesla is currently leading the electric vehicle market. It has risen over 700% in 2020 alone, up to a valuation of over $800 billion. That's the 5th largest US company. And now people are fearing like they missed the boat. There's a lot of fear of missing out on the Tesla stock. Now, a lot of people are pouring money into Tesla, but they're also pouring money into other companies like Tesla or ones that are just vaguely like Tesla. So in this case, they are pouring money into NIO, XPeng, Li Motors, Nikola. All of these companies make electric vehicles, or they plan to make electric vehicles. There's also a lot of auxiliary stocks out there that serve the EV market, such as car charging stocks like Blink, Switchback, and Fuel Cell Energy. They specifically make charging stations the same way the Tesla superchargers are readily available for charging Tesla vehicles. There are also other companies that provide batteries, right, to these EVs. There are very speculative stocks such as QuantumScape or Nano Dimensions. In QuantumScape's case, they make solid state batteries, which are supposed to be huge leaps and bounds above the current batteries that we have now. And then there are other companies like the mining companies that get you the materials for these products, like the lithium for your batteries, or the nickel and the cadmium, or whatever, the copper, whatever you have. Like these companies that give these precious ores and minerals to the companies to make the batteries or the charging stations or the solar panels, the roofs, whatever you have, right? Now the problem here is you're getting so far away from the EV. In this case, you're getting so far away from the market leader, Tesla, that these other stocks are so speculative, especially for the companies whose stocks are reliant specifically on their prototype or their idea. They don't even have products out, like QuantumScape. They don't have, maybe they have lab-made solid-state batteries, but they are not production ready. They're nowhere near production ready, or they're still trying to figure out how to produce them. Or maybe other companies like Nikola that have these revolutionary different fuel types, like hydrogen fuel, right? The problem with Nikola, of course, was that it ended up just being a scam. I'm honestly surprised that it's still up at, I think, like $17, $18 right now, and it's actually going up. But the fact is, hydrogen, while it is a good alternative, it's just not there yet. It's nowhere near there yet. And going back to these speculative stocks, they don't have any products. Okay, everything is still in prototype stage, or in some cases they just have an idea. There was a stock last year. It was like a random solar company that makes solar panels, and they said they were going to make they were going to start making charging stations, and the stock went up through the roof. All they said was they were going to make charging stations. They didn't show any products. They didn't have any demonstrations or anything like that. They just had a press conference saying they were going to start making charging stations. And I remember watching another YouTube video where they said these guys are like nearly bankrupt. So, you know, that's the definition of a speculative stock. I think the main reason that I made this video was from one tweet that Elon Musk said that was not even related to the EV market. All Elon Musk said in this tweet was to use Signal. Now, this tweet was in regards to a social media platform, not a social media platform, but a communication platform that is an alternative to WhatsApp. But the people who follow Elon Musk specifically for stock market reasons, I am one myself, started pumping all of their money into a completely unrelated stock called Signal Advance, which went up by 6,000% just because of Elon tweeting it. Okay, this is speculation in the highest degree. They didn't even know what it was about. They just assumed that it was somehow related to Elon's business ventures. They probably assumed it was for EV or SpaceX or something, and they started pumping money into this random company that just happened to have the same name. So if this was not a signal of a possible stock market bubble, I don't know what is. So what's the lesson here? Okay, invest only in companies that you have high vindication for. In my case, if you've seen any of my videos, you know that I'm a big Tesla bull. I have pretty much most of my stock market portfolio in Tesla. It's diversified, at least half of it is diversified, but the rest is in Tesla because I'm so bullish on Tesla that I know that they're going to be the future EV market. I do have some on NIO, I do have some on XPeng because I have seen the work that they've done, and they actually have vehicles that are being sold at a reasonably good pace in China. China is a big EV market, and I don't see them doing bad there, especially if they're backed by the Chinese government. The problem with, of course, government intervention is that private companies tend to lose autonomy. They don't excel as much with government intervention, even though it's supposed to be there to help them, which is kind of weird, right? But yeah, that is what happens when there's government intervention anyway. In this case, NIO and XPeng's progress might be hastened a little bit, but their innovation will probably be stifled because of government intervention, because their factories are owned by the government, as opposed to Tesla, where all of their factories are vertically integrated. They make the batteries, or at least they will be. They do all of the printing. They don't get any of their materials from other places except for maybe raw materials, but they're also starting to dig their own materials, which is pretty crazy. This is why I'm so bullish on Tesla. So I'm sorry, that was a little of a tangent. When you're investing, make sure it's in companies that you have researched in, not just looking at random tweets and then investing your hard-earned money in there. Not just watching a video. Don't just watch my video. Don't just watch some random guy's video. Especially don't listen to those stock market articles which say, oh, this is the next big stock. Those are often just pump and dump stocks. So do your own research, do your own due diligence, and don't put your hard-earned money into speculative stocks. Even though they do have a very high rates of return, if they do succeed, they are exactly that. They are speculative stocks, and no one knows really what's going to happen to them. So please keep that in mind when you're investing in the stock market. Do your due diligence, okay, guys? If you found this video helpful, I would appreciate a like, subscribe. Tap that like button, tap that subscribe button, and tap that notification bell. It really helped the channel out. If you have not yet gotten into the stock market, check out the links below. Robinhood will give you 1 free stock. When you sign up, Webull will give you 4 free stocks worth up to $1,600 when you deposit $100 or more. And M1 Finance will give you a $10 credit when you deposit $100 or more. Thank you so much, guys, and we will see you at the next video. Bye-bye.